economy shrank 2% on an annualized basis in the period January to March from the previous quarter. Markets in Asia were green across the board. Hong Kong's Hang Seng advanced 1.6%. China's Shanghai index ended flat, while Japan's Nikkei climbed 1.4% at the close of trade. Overnight, U.S. stocks posted record closes after consumer inflation rose at a slower pace than expected, increasing hopes for interest rate cuts. All three of Wall Street's major indices hit intraday records. U.S. CPI data for April led traders to raise bets that the Fed will cut its policy rate in September and December. Other data released showed U.S. retail sales were unexpectedly flat in April as higher gasoline prices pulled expenditure away from other goods. This indicated that consumer spending was losing momentum. The S&P 500 gaining 1.2%, while the Nasdaq up 1.4% and the Dow Jones rising 0.9%. To give us perspective on the markets, we are joined by Mohammed Wagley, who is a portfolio manager at Sasfin Wealth. Mohammed, thank you so much for your time. I gave an outline on the market reaction to that CPI data. Are we seeing that positive momentum filtering through almost 24 hours after that CPI print?
Yeah, very much so, Nastasia. First of all, thank you very much for having me on. But I actually think you summarized it really well. It seems, broadly speaking, depending on what the inflation numbers are coming out with, we're flip-flopping between really positive or really negative. And you hit the nail on the head when you mentioned that it's really got to do with expectations about when that rate cut is going to come in. So the CPI numbers CPI numbers in the US for April rose 0.3%, and that was a lot better than the estimates of 0.4%. It doesn't seem like much, but that is a beat, and the market sort of ran with it. Really what we're thinking now is it might not be September, but perhaps at the last meeting of the year, which I believe is in November, we may actually see that first rate cut, and that's really what has been filtering through to the markets yesterday and today. So at least from a local perspective, I checked not too long ago, we were up about 0.4%, and I do think it is really on the backdrop of the sort of positive sentiment that we're seeing come out the US and really globally.
Positive sentiment aside with the CPI print, but then if you had to obviously have a look at, I guess, local and global markets, what's your sense of the backdrop that equities have had to deal with so far this year?
Yeah, I'd say it's been very much uncertain, somewhat volatile as well. And that's both from a local perspective and an offshore perspective as well. If I'm not mistaken, about 50% of the world, half the world is going to be going to the polls this year, So there's a lot of sort of changes. There's a lot of macroeconomic factors that are putting a bit of pressure just on global markets. And that's really what we've been having to juggle. In addition to that, you throw in sort of the interest rates and the elevated inflation that the market has to deal with. We are seeing quite a bit of uncertainty. I think, broadly speaking, the US earnings have been really good, but that's, really in spite of everything that's been going on. So I do think it's been a bit choppy. We're seeing quite a bit of uncertainty. We're seeing quite a bit of investors sort of staying on the sidelines, waiting for a bit of clarity. So yeah, uncertainty in a word.
What's your sense of the performance of the Rand year to date?
It's an interesting one, truth be told. We've been having discussions at the office about this at length. I think by and large, just the strength that we've been seeing leading up to the elections has been sort of a bit confusing. It makes sense to me that, we'll see a bit of dollar weakness on the back of stronger CPI numbers yesterday. And that's sort of led us to where we are at about 18 Rand, 20 cents on the dollar, which, I could be wrong, but I'm pretty sure is the strongest we've been this year. But a colleague of mine actually pointed this out, and I thought was very interesting. What we're seeing is that the Rand is actually linked to sort of the lack of load shedding, or at least the Rand strength it is. And I think just maybe the takeaway there is maybe foreign investors are looking at this and they're associating, the lights being kept on with growth, So I think that we've not had load shedding leading up to the election, and really for much of this year has been a real boon for the Rand and has kept it sort of strong. But that being said, we mustn't forget not too long ago we were at about 19 Rand 30, maybe even worse than that. So it's quite nice sort of where we are currently, and I'd be using this as an opportunity to send some rands offshore.
Given, if you had to think about your allocation coming into 2024, to what extent has that changed given the changing narratives and the picture that was changing as we went into looking at macroeconomic data or even what corporates were saying?
So I'd say, at the risk of, sounding like I'm tooting my own horn here, I would actually say that not too much has changed. I think going into 2024, we knew that a lot of these sort of macro factors, the elections, the interest rate, the inflation, all of that would be playing a role. And really the view I had, or the philosophy I had taken, was that, within a local context, we've got to take a skew towards rand hedged companies. So they could be listed in South Africa, but really they're companies that make most of their money outside of South Africa. And this really very much remains the case. If anything, it's sort of been reinforced. One has to remember within the context of what we're doing is trying to get a better investment return, really. And to that extent, you're looking for growth. And I think it's perhaps not unfair to say that, regardless of the outcome of the election at the end of this month, nothing is going to change too quickly, in the near term in any case. So I would say that my philosophy was really sort of just reinforced. And then just briefly to touch on from a global perspective, it very much remains the case that AI, artificial intelligence, is really the big buzzword. And that's what I'm trying to get sort of as much exposure to as I can within reason. And, that's not really changed. I think we're very much at the start of the AI story and not the end of it. And we're just going to be seeing and hearing more and more in that regard going forward.
Mohammed, I would have loved to unpack the conversation looking at whether investors are actually, willing to take on risk assets. Unfortunately, we have run out of time, so we're going to wrap it there. But also, we'll leave the conversation around AI and how you guys are gaming out the AI themes within your portfolios. That would be a really interesting conversation. However, let's leave it there. That is Mohammed Wagley, who is a portfolio manager at Sasfin Wealth. And just talking about the Rand, we had on Monday Investec issuing out a note saying that the Rand seems to be making incremental gains. At some point on Monday, it reached around 1839, and that was as the risk premium that had been built into the currency and the bond yields begins to unwind. But we'll see how that goes in the lead up to elections. We're going to take a quick break. When we come back, we'll have more news for you, so stay tuned.